Phil Blackman, current president of Engineers and Architects of Hawaii, an organization founded in 1902. We have community outreach in these Olelo broadcasts, a premiere each second Wednesday of the month on channel 53 at 6 p.m. And then followed up for the rest of that month, the Sunday showings at 1 p.m., same channel. So we encourage too, when you've watched the show and have some comments or ideas, to go ahead and email us with that. Each month we attempt to find one to select to receive an award of $50 for that contribution. Our program for this month features a loan officer for American Savings Bank who has insight into the current market conditions and to the mechanisms and kinds and styles of mortgages that are available. And I think you'll find this an excellent shortcut to a perspective on options you have as an individual that wants to borrow money or a seller that wants to understand the process a buyer is going to have to go through to qualify. And with that, I'd like to have Sam Gilly introduce our speaker for today, who originally was on our Zoom program on 21 January 2022. Thank you, Sam.
I've known Manny for, I guess it's probably just, is it 2 or 3 years you've been with Hawaiian Electric Toastmasters, Manny?
About 3 years now.
About 3 years, okay. And he is a loan officer, but he was doing other stuff before he was a loan officer. But he was really gung-ho a few years ago. He was working, 80-hour weeks, and he was going down to the nearest fast food place. But he's executive residential loan officer with American Savings Bank, and this just this last Wednesday, he gave us a real nice presentation on an opportunity for getting loans called Landed, I think is what it's called, and then maybe he'll mention that today as well. And let Manny take it away. Manny.
Hi, everybody. But my name is Manny August, and I am gonna. Sam asked me if I could just give like an overall real estate and mortgage market update to start the new year for you guys. So this is me, a lot more handsome version of me, a lot of Photoshop there, but I am a residential loan officer for American Savings Bank, and I've been in the mortgage business for almost 20 years. Before that, I was an actual CPA with a small firm called Arthur Anderson. So I'm an accountant by trade. I got into the mortgage business just randomly. Someone told me that I would be a good loan officer. I didn't really believe them, but here I am now. It's been 20 years, and I've actually have had several different roles in the mortgage industry. I've actually been a loan officer, a manager. I've been an area manager for Wells Fargo, where I managed the entire state of Hawaii. And then also I took a year off, and then I came back and I joined American Savings Bank. So it's been a really interesting career, but I really enjoy the mortgage business. As an auditor, no one ever liked seeing me come out to audit their books. But as a loan officer, I get to help put people into homes and help them get that home ownership goal. So it's a very rewarding business. So just a quick overview of the real estate market currently in Hawaii. I do apologize, I didn't update this from when I first prepared it for December, because I was going to speak in December, but they ran into some issues. But the average median sales price as of November of 2021 was $1,050,000. That's pretty crazy. When I got into this business in 2003, I think the average median price here was about 400, around there, and condos were about 250. So even for condominiums, the average median price is 500,000, but that's really depending on what market you're in. I mean, if you're in town or in Kaka'ako area, the median price is way higher than that. Now, the days on market is a huge thing that we track. right now, I think as of the end of November, it was 10 to 12 days. What that means is that if you put a property on the market, or if you list your home, on average, it would take 10 to 12 days to basically enter into contract with a new buyer. The normal range for the days on market is between 40 to 45 days. So 10 to 12 days means that if a property comes on the market, it's going really quickly. Mostly if they price it right, but there's just so many homeowners out there trying to buy property that it's, properties are going very quick. Now, the reason why, the prices have gone up a lot, and also, why the days on market is, what do you call that, is so short, is there's been a huge lack of inventory. A lot of people thought when COVID occurred that the market was going to crash. But what happened was kind of the complete opposite. The Federal Reserve lowered rates. So rates, at one time during COVID, you could get a 30-year fix at 1.875%. That was just crazy. And the other reason why there was such a lack of inventory, everyone was kind of stuck in their homes, so no one was selling their home. So a lot of people were looking to buy property because they were tired of staying at home, or their houses were too small with COVID, so they wanted to buy property, but there was just no one selling. So as there was less properties for sale and more buyers, the prices started to go up because people bidded more because they could afford more with the low interest rates. The other issue is cash buyers. Now, it's not an issue. What it is the Federal Reserve and the government has put so much stimulus into the marketplace that people are flush with cash, and cash buyers are basically dominating the marketplace. Now, it has changed a little bit, over the COVID's been here for almost 2 years now, so it has changed a little bit, but still, there is still a lot of cash buyers. The other thing that happened a lot was there was a lot of mainland buyers buying into the market. So Hawaii overall is a very expensive market, but if you're comparing us to like a San Francisco market or like a New York market or some of these tech markets, Hawaii is relatively cheap. And the other thing too is Hawaii has very low property taxes compared to like California. So Hawaii's property taxes on $1 million property is about $300 to $400 a month. But in California, $1 million property will have about $1,000 a month in property taxes. So in Hawaii, people are buying here and they can afford a lot of house, and they're pricing out local buyers, which has been kind of challenging for a lot of the locals. The other issue is just down payment requirements. With this huge jump in home values, to get a property, the down payments, that's like the biggest challenge for a lot of the local buyers is, you need a down payment. Even 5% on $1 million home is 50 grand. And not a lot of people, some people are working 2 jobs, dual income, and still to raise 50 grand can be a challenge. So that's been a big hurdle. And the last thing is just interest rates. Interest rates were very low, so it created this, market increase in values. But I'm going to talk a little bit about where interest rates have been lately, and they have moved up significantly in just this month. The one way to help improve your ability to purchase a home is really to get pre-approved. And the reason why I have the word pre-approval versus pre-qualification is because a pre-approval means that you've provided your income, your credit's been pulled, we've verified your assets, and we have confirmed that you are eligible for financing. A pre-qualification could just be a conversation that me and you have that basically, doesn't really give you, confidence that you can actually close, but it just says, yeah, I think you can do it. But what a pre-approval means is that you've completed a loan application, we've verified your pay stubs or your tax returns or W-2s, and then also verified your all your assets, and then also verified maybe your rental history, like your payment history, so that you're a well-qualified buyer. And what that does is that if I pre-approve you and you have another, let's say you want to make an offer on a property and there's 2 buyers, or let's say in the current market, there could be 10 buyers trying to make an offer on the same property. If you're pre-approved, you're putting yourself in a different category than other buyers that are pre-qualified. Now, it's super important in today's market to be pre-approved, and also what's called verification of funds. So if you're saying 20% down, a lot of the realtors want to know that I have verified the funds, that I can say, yes, I verified the funds and that they have the funds to put down. So that's something that's, it will help strengthen your offer. Now, where are interest rates at? So today's current rates are somewhere between 3% to 3.5% on a 30-year fix. Like I said earlier, during COVID, the lowest rate I saw was 1.875. So we have moved up significantly since, and the Federal Reserve is planning to raise rates 4 times this year. So we could still see the current mortgage rates start to trend higher from here, but it has stabilized just recently. This past week has been pretty stable. Now the 15-year fix is at 2.375 to 2.875, and even the 15-year at one point, I mean, you're looking at 1.5% on a 15-year, which is just crazy. A lot of people ask about home equity lines of credit. Now, in the last 20 years, a lot of the local banks, well, not last 20 years, I would say ever since the credit crisis, the local banks have really had these promotional rates for home equity lines of credit. And it's only the local banks. I worked for Wells Fargo, and the Wells Fargo home equity department was very limited in what they could do here in Hawaii because they wouldn't match the same promotional rate. So right now on a home equity line of credit, you can get a 1.25% 2-year promo rate, and it goes to 3.5% up to like a 15-year fix on a home equity line of credit. And a home equity line of credit is just a big credit card that's tied to your property. It's secured by your property, but it does come in handy if you need to tap cash very quickly. The other thing too is what is the trend for 2022? In reality, it's just going to go higher. Rates, we expect rates to be maybe in the mid 3s to high 3s by the end of the year. I don't see it going into 4%, but it could. But even at 4%, I mean, a lot of you guys may remember when rates were at 1.13 to 15% back in the 80s, I believe. Now, that's a long time ago, but still, I mean, could rates go that high? I don't see it going that high, but I could see it go somewhere between 4 to 5% for a longer period of time. But the reason why they want rates to go up and the Federal Reserve to raise rates is so if we head into a situation where the economy takes a downturn, the Fed can basically come back in and lower rates to help stimulate the economy again. So they do have to raise rates, to try and help cure inflation, because that's a big issue right now, because the cost of goods for everything has gone up. I was just chatting with a friend. I think there was a nightclub called Ocean's Nightclub that I used to go to. And when I first started to go there almost 20 years ago, I think I bought my Corona beer for $1.50. And now if you go to a bar, a Corona is $10. So that's inflation. That has made things a lot more expensive. A lot of people ask, who is my lender? So American Savings Bank, we do originate loans and service loans, but a lot of times we end up servicing loans for other investors. These other investors are what's called a secondary market. Now, the secondary market during the credit crisis was pretty significant. There was about 2,000 different lenders that you could choose from. There's a lot of these subprime lenders, but currently, the market has really shrunk. What I mean, ever since the credit crisis, it's been predominantly the Fannie Mae and Freddie Macs of the world, as well as Ginnie Mae and the VA lenders. Now, what that means is that, for example, if Fannie Mae and Freddie Mac, we deal with a lot of Fannie Mae and Freddie Mac loans. So I may originate your loan, and if I close your deal, if it meets Fannie Mae or Freddie Mac's rules and guidelines, then ASB can basically transfer that loan or send that loan to Fannie or Freddie, but we will still service your loan. So that means your loan will still be billed and you'll pay American Savings Bank, but Fannie and Freddie Mac is the one that's holding that investment. Now we get a small premium to service your loan, so we don't make a lot of money on that, but if you hold your loan long-term, we make a good premium over time. But Fannie and Freddie is the one that if you do not make your payments, and let's say you have to foreclose, and let's say the values go down, Fannie or Freddie will take that risk, and they are the ones that would incur the losses. Now, Jenny Mae will do more like government loans, which is like the FHA loan, which you guys might have heard. VAs, like for people that are in the armed forces. And also there's a program called the U.S. Department of Agriculture or USDA loans. Those are in geographically restricted areas like Waianae, Makaha, certain parts of Kapolei and Eva Beach, but those are really just, there are certain income requirements and so on, but they're 100% financed. And so there are some pretty decent products out there. Now the private market, there are very few investors. So remember I told you that during the credit crisis or before that, there's about 2,000 investors. The private market is very small. It doesn't have a huge amount of players still. There's not a lot of liquidity. So really the Fannie Mae's and the Jenny Mae's of the world are the ones that predominantly like 90% of all the loans go to. But private market today is kind of going to be more like subprime lenders, meaning like they'll do some really funky stuff, but it's not something that's done that often. Now, the other thing too is in regards to American Savings Bank, we do also do loans that put our money at risk. It's called portfolio loans. And those are typically for loans that we cannot sell to Fannie Mae, Freddie Mac, or Jenny Mae. And those are a lot of times jumbo loans, like a $2 million loan, we wouldn't be able to sell to Fannie Mae or Freddie Mac because it's above their requirements. Or in Waikiki, there's a lot of condo hotels. We can finance those. We do construction loans, land loans. We do co-ops. There's a few co-ops in the Gold Coast and Waikiki area. So we will do all those types of loans in our portfolio, which means that American Savings Bank is taking the risk. So what is the difference between a bank, a broker, or correspondent lenders? So a bank is like American Savings Bank or Bank of Hawaii, CPB. We can fund our loans. We can also service loans for these entities. A broker is an entity that doesn't fund, they don't fund their own loans. They basically have what's called wholesale channels that they can broker the loan to different banks. A lot of brokers say that they have like 20 lenders to choose from. Some say we have hundreds, but really predominantly they use 1 or 2 lenders because they just have a more comfort level with them, and they to try and say they shop 100 lenders. I would say that that's not really very true, but they can say that. A correspondent lender, if you guys have ever heard of like a company like called Primary Residential Mortgage or Compass Home Loans, they basically fund loans in their name, but they don't service loans. They will sell that to other banks like Wells Fargo or Chase or Bank of America, who will actually end up with the servicing. So brokers and correspondents, they don't service loans. They basically will sell those off. Sam also asked me to talk a little bit about some special programs and products that we have to help home buyers. So one of the programs that I've been doing for a long time since I got into business is the Mortgage Credit Certificate Program. This program, because I was a CPA, I'm very fond of it. Basically, if you think about the mortgage interest deduction, a lot of people will say, well, buy a home, you get some tax breaks. Well, the mortgage credit certificate, if it's available and if anyone's eligible, it basically puts your mortgage interest deduction or your mortgage interest benefits on steroids. So if you think about this, if you have $20,000 in mortgage interest, you typically can itemize on your tax returns and reduce your overall taxes. But a tax credit means that you get that money dollar for dollar back. So if you had $20,000 in interest, again, you can itemize, or if you had the MCC, you could basically take 20% of that, or $4 grand, and you would get that as a tax credit. That dollar for dollar comes back. The remaining 80% or 16,000 could still be an itemized deduction, but that 4,000 dollar for dollar, that's huge. So that's a program that's they weren't available during COVID for like the first year and a half, but it actually just came available in January. They are for first-time home buyers. Also, there's income requirements and a purchase price requirement. So it's not going to be for someone that's buying $1 million property, but it's really going to be a first-time home buyer buying like a condo, I think about 630 or less, 630,000 or less. So if you know anyone that's looking to buy something for their first time and they're looking for a small condo to buy, this is a great program that can benefit them. The other program that I was going to talk about is the Landed program. The Landed program has been around for about 2.5 years now. And the Landed program was rolled out by the Zuckerberg Foundation. And they really rolled it out in California first. And the goal of the program was to help educators buy homes in communities that they live in and or that they work in. So they were really focused on high cost areas. So San Francisco, a lot of those areas in that area. And what they noticed was that a lot of the teachers couldn't afford homes in the communities that they were working in. So they basically put this program together to try and help. Now, the program was rolled out in Hawaii, and it's for these groups. It's the Department of Education. So any employee, so initially the program was for teachers, but basically for this in Hawaii, they rolled it out, the Department of Education, any employee of the University of Hawaii school system, as well as their community colleges, and also Kamehameha Schools, because Kamehameha Schools was one of the organizations that helped bring it to Hawaii. And also first responders. They just recently added first responders, which is really excellent. That means police officers, healthcare professionals, firefighters. So it's a very vast amount of people that could be eligible for this. And if you are one of those people that are eligible, even if you're married and the other partner is not, that's fine, you can still be eligible. But what the Landed program does is it provides up to $120,000 in down payment assistance, but up to 15%. So for example, if you bought a $800,000 property, they will give you $120,000 in down payment assistance, but you have to bring in 5%, which is $40,000. And with the 5%, 40,000 plus the 120, that equals to 20%. So they help you get that 20% down payment. And again, 20% down payment does a lot of good things. One, it helps reduce your mortgage payment. You avoid mortgage insurance. And really with this program, you can qualify for a higher level. Now that $120,000 investment, there's no payments that are required to be made back on this as you own the property. Of course, it has to be for your primary residence. And as long as you live in the property, you don't have to make payments, but you do have to pay it back within 30 years, the down payment assistance, but they also share in some equity. So if the property value appreciates, they share in some equity in the property upon sale, or you can buy them out with a refinance. But also the great thing is that if the property does depreciate in value, goes down, they actually share in your losses too. So they share both ways, up or down. So the program is really trying to help educators get into homes, but they've expanded the list of people that can actually use this program. For this one, the great thing is there's no purchase price limits, there's no income restrictions, and you don't have to be a first-time home buyer. Someone did ask in the chat room about, is there income requirements for MCC? Just let me go back to that real quick, but MCC, there is some income requirements. The income requirements, it's online. I don't have it in front of me, but it's pretty good. It's about, I think it's like 140 for a couple of like a household of 2 or more. And I think it's about 120 for a single person. So single people for sure can benefit from it. Couples, depends how the dual income is, but I'm closing 2 right now because they just rolled out in January and I had 2 people that met the requirements. So we're using that program for it. But I can share more details with Sam, and he can forward that over to you guys later. The last 2 special programs that I was going to talk about real quick is affordable and reserve housing. This is something that the state is really trying to offer more. And affordable and reserve housing, it's a very hot topic because the prices in Hawaii have gone up so much. But on all the islands, there's affordable projects out there. Kaka'ako is a huge place where there's a lot of affordable housing. And the reason why is because all these high rises in Kaka'ako, anytime you build a high rise, you have to build a certain percentage of affordable units as well. So there's a new project called Ulana that's just started doing applications for. It's going to be done in 3 years, and the entire project, about 500 units or so, are all affordable, and they're studios, 1 bedroom, 2 bedrooms, and 3 bedrooms, and they have all types of different income requirements. And we're working on getting a lot of buyers pre-approved for that project. So that's a huge project. Mililani, like Koa Riz, just has another affordable project that they rolled out. There's other, every single community is trying to do more affordables, even on the outer islands too. Now, the last program is the city and county down payment loans. I'm not going to talk too much about it because it's a very small amount of funds that are available, and typically it goes quick, but they provide, I believe, up to $40,000 down payment assistance that's interest-free. But again, the income requirements are so low that only few people can really meet the requirements, and it's really hard to utilize. It's really going to be for home prices about 300 to 400,000. And a lot of times I tell people to go to the Hawaii Home Ownership Center to do those, because they have products that can basically assist, where a lot of the big banks have a lot more challenge doing those programs. But those are some of the special programs that are out there. If you guys do have any questions, I would like to open it up to you guys. But thank you guys for letting me come and speak to you guys today. If you guys have any questions, I'll send the deck over to Sam, and then you guys can let me know if you guys have any questions. All right. Thank you, guys.
Okay, thank you, Manny. Really appreciate a lot of good information. So I'll talk to you later and get the certificate over to you.
Engineers and architects of Hawaii welcome your comments on this program and any of our recent programs. We encourage your direct participation in this community outreach. So please email us your comments and ideas at eahawaii@gmail.com. Each month, a $50 award will be given for a selected comment or idea on current or past programs. Mahalo.